On today's episode, we are going to take a look at 3 stocks to add to your watch list right now. The first stock is one that many consider to be the Google of Russia. The second is a company that many consider to be similar to PayPal and Square and is currently a SPAC deal. The last company is an insurance company that's being praised by millennials. I'm also going to give my thoughts on the overall Chinese stock market right now. We're seeing a lot of big news with Baba and Tencent, so I'm just going to explain what I'm doing. Like always, welcome back to the channel. My name's Jose Najarro and I am a self-taught investor. Before we start, let's make sure to smash that like button. It helps so much with the YouTube algorithm. And if you want to know when I buy or sell stocks, on the description and the pinned comment, you should see a link to my Discord channel and also to all my other social platforms, which are free to anybody that wants to join. Also, don't forget to get your free stock on Webull. If you deposit $100 using my link below, we both get a free stock. Sometimes they do special, we might get 2 free stocks. Finally, I stream on Twitch, and this is pretty much a short version of that 1.5 hour stream that I did yesterday. So feel free to follow me there and join me. The viewers there control the show and tell me what stocks they want me to take a look at. They also ask a lot of questions. So if you have any questions, feel free to follow me on stream. I usually, on Twitch, I usually post on my Discord channel and on the YouTube community when I'm gonna go live. So let's get started. With Baba, I know the major thing with Baba right now is the overall government issue with China. How it seems that the Chinese government is kind of fighting Baba for some reason. Overall, I'm not a Chinese citizen, so I don't know how much that government is really gonna do with Alibaba and how much they can really destroy the company. But that's definitely scaring investors. For me, I am in plenty of Chinese stocks, and if I'm not in Baba, but if the government was after one of my Chinese stocks, and I believe they're kind of fighting Tencent right now, I personally am not going to do anything about it. I'm just going to continue to hold because this comes with the international risk. You know, international governments are kind of iffy, so I understand the risk. Again, Tencent is one of my tier 1 companies. But at the same time, I know they're a Chinese stock company, so I only buy X percentage. So always buy the percentage in your portfolio that you're willing to hold and understand. And Baba Baba I do believe has great fundamentals, and the overall business I think is great. But right now, I think Chinese companies are definitely going to be very, very volatile in the upcoming months. But I mean, volatility works both ways. Obviously, we can have bad days. For example, in less than 2 months, it's dropped 30%. But in year to date, right, in like 6 months, it went up over 75%. So don't always just look at the bad, try to look at the good in it as well. But it does suck buying at the top, and that's why I dollar cost average. Every week I put money into a market like that. I don't get stuck buying at the top one time and then being screwed. Sometimes I buy at the top, sometimes I buy at the bottom. It helps me with my emotions. It helps me be emotionless in the market by putting money every week. Like I said, some weeks I buy high, some weeks I buy low. But I want to see Tencent. Has Tencent also taken a beating? Oh wow, it has. It's at 67. It was at 80 something. Tencent is probably one that I might start adding up maybe this week. I saw today ARK was buying. I don't know if you guys saw their email already. They did buy a lot of Chinese stocks, it seemed. They bought KE Holdings, which is that Chinese Redfin, the China Redfin. They bought Tencent here in their ARK fund, and they also bought it here in their ARK W fund. They bought some NEO too. That's pretty cool. I'm seeing hopefully the stock price stays like this. Thursday, I put my money into the market like every single week. So I think I might go with Tencent on this week as one of my purchases. They're also buying Baba. Zoom has also taken a big hit. And yeah, I've seen they've been buying Shopify for a nice amount. And they're buying a nice percentage. Look, 0.4% of their ARKF. So they're doing a lot of decent buys here. These are some decent sized positions. My poor Huya's taking a beating too, right? Huya has been, there's 36% on Huya. But I do think maybe this week might be a week I might just start buying a bit of international companies, since they're taking a nice beating right now. Zoom might be another one, and T-Doc might be another one. Pretty crazy how, look how flatlined it's been. I mean, there's movements around here in Teladoc, but since, I want to say since April of 2020, this stock price has not really moved from it. Just that noise up and down. So that's pretty crazy. All right, so let's take a look at some companies. Let's start off with, I feel like we've taken a look at Yndx before, but you say Farmer is the Google of Russia. Index. That's why I would call it Index, but I'm guessing it's Yandex. It provides, all right, let me zoom in so you guys can probably see it too. So it's a Russian-Dutch multinational corporation providing internet product services, including transportation, search and information, e-commerce, navigation, mobile application. Its main competitors in Russia are Google. So Google is still allowed in Russia, it seems. The firm is the largest company in Russia, and it has the largest search engine on the internet, Russian, with a market share of over 52%. And it's the 5th largest worldwide after Google, Baidu, Bing, and Yahoo. Right here, one of its biggest advantage for Russian language users is the ability to recognize Russian inflection in search queries. Okay, I guess, is Google not smart enough to do that yet? But that's pretty impressive that it has the highest market shares in Russia right now and Europe. Let's take a look at them. So it has a market cap of $24 billion. All right, so you can trade it in the NASDAQ and ticker YNDX. Future growth. It is profitable already, so that's pretty cool. If we take a look at cash flow from operations, it is positive. And so it has positive cash flow from operations. Revenue is expected to grow 29.7%. This is a crazy growth company for sure. Right now, earnings are also expected to grow. What I really like to see is how this cash flow from operations is expected to grow, and that it is positive in cash flow from operations and in also in earnings. If we take a look at their balance sheet, they have about $82.6 billion in debt, and they have about $250 billion in cash. So they have way more cash than debt, and they also have strong growth in revenue. They have a strong earnings, and they have positive cash flow from operations. And I am trying something new. I used to do my videos, my streaming on Sundays, but now I want to do them a little bit more frequently, especially since I'm not doing as many YouTube videos now. I'm probably doing a YouTube video every other day. So I want to still stay in touch with the community, and I do believe I'm going to be streaming more. So make sure to subscribe or follow me on Twitch, and we can definitely take a look at more stocks. And then next, I want to take a look at ownership. We can see right now, the founder owns about 10% of the business, and individual insiders own about 12%. So fundamentally, right? Fundamentally, Yandex, I'm going to call it Index because it really looks like Index. Index looks pretty cool, right? If it is the Google of Russia, it has a huge market share. Just a quick overview, it doesn't look like a bad company at all. Earnings, strong growth, strong health, and strong past. So my hero's journey, can you please look at Zoom, mRNA, is that Moderna? Is that Moderna? I think so. Okay, Moderna stock, and Baba, please. I'm down big time. Should I hold or sell or average down? Seems tomorrow is the last day to take losses. So Hero, first of all, obviously, I personally don't recommend anything. For me, Zoom is a company I'm actually buying right now. I do see potential in Zoom at the current stock prices. But let's say if I was in your shoes, and I was in a company that I bought and I was down big time on them, what I would do is every time I buy into a company, I know how much I'm gonna buy into it. So I only buy 5-6% of a company. No matter if it drops a lot, I'm not gonna continue to increase my position if I already met my limit. So the first question I would ask myself, have I met my limit on the stock? On how much I would purchase of the stock. If the question is no, I haven't met my limit, then I personally would buy a little bit more if it's on sale. But if I already hit my limit on that stock and it's dropped, I'm not going to continue to chase and chase and chase. I have a plan. I have a plan that, hey, Jose, once you hit your limit, you're not purchasing anymore, because then you're just trading emotionally, and I just want to take emotion out of the equations. So I don't know if that kind of answers your question, but I would do, that's how I would do. First, has it hit my limit of how much I'm willing to hold? If not, then I would average down. If it has, then I wouldn't. I'll just and then after that, I would be like, Jose, do you see, outside of the stock price, what else has changed in this company? Is the stock price drop something that is just caused by volatility right now? Maybe the stock price was a little bit overextended, or has the company actually shifted to something else and it's no longer the company I invested in? If it's no longer the company I invested in, then I probably would start selling small positions here and there. So again, hopefully that helps out. So BFT, is this a SPAC as well? Yes, it is. I feel like I did a video on this one. Let's take a look. Now we're taking a look at BFT. So this is a Square PayPal type stock, Paysafe. Let's take, the only thing I want to say right now, potatoes, with this holding is the stock price right now is at $16.30. That means the stock price is already up 63% from the original value that they expected to buy. And Katos, if you didn't know, one great thing to do is go to Paysafe and you put investors presentation. And here, Paysafe kind of, so this is just Google Paysafe investors presentation, and it kind of gives you more of information about the company as well. So let's see what they have here. Let's see, I just want to do a quick overview about them. So they are the leading global pioneer in digital commerce. Total organic revenue growth, compounded annual growth rate of 11%. That's actually pretty impressive. It's not a super fast grower like we've seen, right? Normally, so this 11%, they say organic revenue, compounded annual growth rate. This is pretty much this number that I see here. So this number that I see here, future growth, this 29.6%. Paysafe is saying that they're expected to do somewhere around 11%. Not a super growth company. I consider 15% or higher a super growth, but it's still not. It's definitely not a slow one either. Oh, this is pretty cool. I did not know they did this. This is I'm liking this already. So they are the #1 in iGaming eCash network. They work with, for example, Twitch, with Fortnite, with Spotify. That is actually pretty cool. They are the #2 global store value in digital wallets. They work with DraftKings. That's also pretty impressive. Overall, if you guys know me, I'm very bullish in the e-gaming market, in the esports market. And for them to be working with Twitch and Fortnite and like Spotify, I think that's a huge win for them. So they have like digital wallets, they have eCash, and they have point of sales, it seems. So that's pretty cool. But we can see organic revenue from e-commerce has grown 75%. Pretty impressive. I want to see what other customers they might have here. But I'm pretty bullish in just that overall iGaming. See, so what I want to say right now, the stock price, it is definitely very overextended. And this usually happens with SPAC calls. Like I mentioned with Tattoo Chef is a prime example. When it IPO'd, right? You can see it definitely overstretches. And normally, even in the SPAC calls, when it overstretches, it eventually pulls back down. So with BFT, I do like it a lot right now with what I'm seeing. I'm gonna do a little more research on them. But if I was to get into BFT, it would definitely be a very small position, because I would very much expect some form of pullback. In the near future. And then in that pullback, that's when I probably would enter a little bit more. Colin Carlos, yeah, let me talk about OSS. That is so weird. I mean, I think it is insane that the stock price jumped this much after my video. Obviously, we have big whales watching me. But even, I mean, in the past 5 days, the stock price has gone up 41%. I don't know what the heck happened. I'm not selling any of my positions, that's for sure. Definitely not selling anything on One Stop System. Like I mentioned, One Stop System in my video is a very small cap company. I said it's going to be very volatile, right? And that's what we're seeing, is very volatile. It's right now jumping 10%. So I do believe it is possible for the upcoming days that we're going to see negative 10% days, negative 20% days. I'm never going to make this a big position in my portfolio. But I do see the potential in it, that it can continue to grow. Even at $67 million is still a small, very small company. And I kind of see more, I do believe what's, don't quote me on this, but I want to say maybe in a year, within a year, it might be acquired by a bigger company, just because it is such a small company. It is such a small one. I'm actually, I don't know if it's because I'm looking at more based Lemonade stocks that I'm seeing a lot more ads on them. I'm still old. I want to say an old head. I don't have. I have the traditional Geico insurance. I have my car insurance to Geico. I have my home insurance to Geico. But this seems like a lot easier. I saw they had pet health insurance, and I was just talking to my cousin who has a few dogs, and I was gonna say, hey, try them out and let me know how they do, because I personally don't know anybody who has used Lemonade. The overall business seems pretty cool. The AI, how they can do things so much faster, especially with us younglings. I want to say, I hate talking on the phone with people and going through talking to one person, talking to another person, talking to another person to just get my damn money back. So it's pretty cool that they say it takes 90 seconds to get insured and 3 minutes. Obviously, it might not be that fast, but it's still a lot faster than anything. But let's take a look at the stock price. So again, here, when I open a position, I don't really look at technicals. But when I am in a position, I do look at technicals. And this is the reason, right? When I'm in a position, I don't like to buy when it's overextended. I kind of only buy when it's kind of sitting at its moving averages. This is another prime example. Look, it kind of overextended, and then moving averages happens. And here I have pretty much my whole portfolio. And if you guys ever want to know how I come up with my watch list, this is what I do. The day I get my money, the day before I get my money, I have my whole portfolio on a watch list. And I pretty much just do this. I look, I see which ones are overextended, which ones are not overextended. And if they're not overextended, I put a green bar on them. I do this over and over and over until I have a green list. Once I have my green list, I'm able to look at all my green companies. And then from there, I start looking, oh, how much exposure do I have on this company? How much exposure do I have on this company? And that's how I decide what to buy. That's the secret of my buys in my channel. So for home insurance, Lemonade is not cheap. Most users are rent insurance. But once they go into home insurance and pet insurance, they will make bigger bucks. And I feel like Lemonade right now is one that the overall company is probably one that maybe more young people are looking at. Let me take a look at Google Trends. Lemonade insurance. I just want to see how the overall trend is. So look, Lemonade pet insurance is one that's breaking out in the past 12 months. That's actually pretty impressive. It's rising. Lemonade pet insurance reviews is another one. So it seems like a lot of more people are searching for Lemonade pet insurance. And here's another trick I do when looking at companies. I pretty much just put the company's name, see how Google Trend is doing, and seeing what people are searching about them. So another tip or trick, so yeah, it seems like you guys were mentioning renters insurance is one of the biggest search engines, the top searches for Lemonade. So renters insurance, Lemonade's renters insurance are the biggest search right now. And surprisingly, in Texas is one of the biggest. Texas, California, of course, New York, New Jersey have high searches on them. Yeah, no, that makes perfect sense. Mainly millennials use Lemonade. I definitely agree with that. They are currently more likely to be renters, very true. But at some point, these renters will be homeowners. Yep, people stick with what they know, which is why I personally have stayed with Geico. I've had it since I was 18 in my car insurance. So it's been fine with me with my car insurance. So I decided to go with it for my home insurance just because it's something I know. But these people that are now entering Lemonade as a renter's insurance, like you said, once they go into homeowners, they're more likely to stick with it. So if we take a look at future growth, they are expected to grow revenue 30.9% on average. Strong revenue growth. One thing, it seems pretty scary to me. They're not positive in cash flow from operations. And I don't really care too much about positive earnings, but positive from cash flow from operations is something I definitely want to see positive. This is money from their everyday business. But I want to say, maybe now that I think about it, because they are in the fintech business, their cash flow statement is a little bit different. I have to look a little bit closer to them, but I do believe financial companies, it's not cash flow from operations to where they make their positive cash flow. It's more from cash flow from investing or cash flow from financing. So I want to do a little more research. If we take a look at their balance sheet, great balance sheet. Anytime I see no debt in a company, it is one of my favorite things. And they have plenty of cash at hand. They have about $600 million in cash, no debt at all. So overall, strong growth, strong financial health. The only thing I want to say is really tricky right now is it's what did we say? It was a bit overextended right now. It is pulling back a bit, so that pullback is definitely giving a nice buying opportunities for ones that want to look at. I hope this stream was pretty cool. I probably want to do about 2 or 3 during the week. Like I said, I'm gonna be doing a little bit less YouTube videos. But I like doing this because I learn about new stocks in the way. So that's it for today, guys. I hope you guys enjoy it. Have a good night. Make sure to go watch my recent video. Hit the thumbs up. It helps so much with the YouTube channel. But take care, guys. I think my next one might be either Thursday night or tomorrow night. I'll definitely let you guys know on the Discord channel or on the YouTube community chat.